What's going on, everybody? Welcome back to the channel. 911 emergency alert, alert, alert. What is going on in crypto? We're going to find out in this video with the price analysis for your top 10 favorite cryptos. I am winning, and so are you. Here we go. All right, guys. So, are we headed for a bear market? What's really going on in the crypto market right now? Obviously, there's some crazy stuff going on in the stock market. If you guys have seen this with GameStop, with BlackBerry, Reddit users got together, banded together, and they're running up the price on a couple of stocks against the hedge funds. And it's really driving people to crypto. You know, like it's scaring people into realizing how manipulated the actual stock market is, but that's also hurting the crypto market in the short term because people are afraid, like, is Bitcoin manipulated? You know, there's been a couple of those hoaxes in the last couple with the double spend, this, that, and the other. So what we're going to do today is we're going to analyze the price on these cryptos here, the top 10, and we're going to get some analysis here so that way you can use smarter ideas going forward. Now, if you are a Bitcoin holder or a Litecoin holder or an XLM holder, this is also good for you because it'll let you know, hey, is this going to be a short-term turnaround or is this a real bear market? Should I sell my coins or should I hold it? Now, if you are a holder of coins, we know that another bull market is coming in the future, so you may just be weathering the storm here. However, if you're a trader of coins where you're day trading and you're doing that type of thing, this is actually potentially good for you as well because this is a spot for you to short the coin. So let's take a look. We're going to dive in right now. We're going to start with Bitcoin and work our way through these top 10 here. Bitcoin's dip below $30,000 triggered a sell-off in altcoins, and dip buying traders might not have enough momentum to cause a relief rally. Public companies have purchased about 85,000 Bitcoin BTC in the past year, and institutional investors have pumped money into grayscale investments, which shows increasing institutional adoption is one of the main reasons for the recent Bitcoin rally. However, at the moment, it seems institutional investors are unlikely to chase prices higher. If the fresh inflow of money stalls or reduces dramatically, it could result in a pullback in Bitcoin's price. If that happens, short-term traders and momentum players may book profits and trigger a deeper correction. So what they're talking about here is, for example, you may have bought Bitcoin at 20,000, 25,000, 30,000, whatever the case may be, right? Probably more in the 20 to 27 range. It ran up to 40. When it got to 40, a lot of people sold their Bitcoin and that helped the price come down, right? There was a correction there, but then more people got scared and then they sold, and then more people got scared and they sold. And because more and more people are selling, the price is continuing to dip down. So is it smart to let all your coins go now and realize some profit taking like it says here? Or should you just weather the storm and buy during the dip if you're a long-term holder? A correction will be a healthy sign because it will shake out the speculators and only the long-term holders will be left in the market. As the price dips, additional institutional investors may start buying at lower levels. The transfer of Bitcoin's ownership from speculators to long-term investors will be positive in the long term. If Bitcoin enters a deeper correction in the short term, several altcoins are likely to follow suit. Let's study the charts of the top 10 cryptocurrencies and determine the support levels where buyers may step in. Bitcoin, BTC, USD. Bitcoin broke above the 20-day exponential moving average of 33,254 on January 25th, but the traders used this rise to sell, which pushed the price down to 30,450 support on January 26th. The bulls purchased the dips but could not push the price above the 20-day EMA. The Bitcoin USD pair has resumed its correction today, which shows that the bulls are not able to absorb the supply. The downsloping 20-day EMA and relative strength index RSI in the negative zone suggests bears are in control, If the bears can sink and sustain the price below the 50-day simple moving average, 29,407, the pair will complete a bearish descending triangle pattern, and this could result in the price dropping to the 50% retracement level of 25,897, and then all the way back to the 61.8 retracement of 22,106. The bearish view will invalidate this price if the price rebounds off the current levels and breaks above the downtrend line. If that happens, the pair may rally to 40,000 and then to 41,959. So let's take a look at the chart. Okay, so right off the bat, we see here the Fibonacci's. You can see each level is a different color as well. Okay, so from here to here, which is the low to the high, if you do the retracement on that, or if you pull the fib levels all the way up, and you'll see that then you get these markers, right? So this one was the 2.3 or 0.236, the 0.38, and the next one is the 0.5, and then we got the 0.618, which is at 22,106. So what that means, the price ran up, it then came down and it hit that support level, which we talked about in other videos. It ran up again, but at a lower level. The downtrend has begun, okay? Then it came back down again. Excuse me, bounced off of this support line, and it hasn't managed to even get back above the moving average of the 20-day EMA. So it's below there. However, it is trapped above the 50 moving average. So it's in this middle range here. So we want to see this bump above that. If it does not, it could retrace all the way to the 50, or if not, all the way down to $22,000 roughly for Bitcoin. So keep an eye on that. Also, you have right here, the RSI, it is in that lower level, right? So as we've talked about in all of the videos before, when it's above this pinkish bluish or pinkish purplish line, this is the overbought territory, which is where you want it to be. You just don't want it to be maxing out here, because as you can see, when it maxes out, it starts to drop. But when it's this low, that usually indicates that it's time to buy, because the price is lower than it should be, really. And so we're going to buy back up. So over the next couple of days, we're going to see what happens here. This is the daily chart, so let's keep an eye on that. If it breaks down below this moving average, if you're a trader of Bitcoin, not just a holder, look for sales. But even if you're a holder, I mean, you could get out of your position if you wanted. By the way, this is not financial advice. I'm just showing you what the analysis says here and what the fundamentals say. So I hope you take this and use this knowledge to help yourself make some money in the markets. Ethereum, Ether's ETH inability to sustain above the 1400 on January 25th shows the bears were booking profits at higher levels. The bulls again attempted to regroup on the 26th, but the altcoin has turned down today, which suggests traders may be closing their long positions. So people that bought in the long position, meaning buys of Ether, when it got to 1400, which was a psychological level for a lot of people, they did book their profits, meaning that they closed their trades at that point, took their money home, and now because of that, the price is starting to drop down. The negative divergence on the RSI shows the momentum has weakened. If the bears can pull the price below the 20-day EMA of 1211, a retest of the uptrend line is likely. This is an important support to watch out for, because a break below it will signal a possible trend change. The next support on the downside is the 50-day SMA of 928. On the other hand, if the bulls can't sustain the current rebound, it will suggest that the bulls are buying the dips. If the bulls can push the ETH USD pair above 1400 to 1473 resistance zone, the uptrend could resume. And the next target would be that 1675, which we've been talking about for the last couple of weeks, because that's where we were pacing, right? Everything was pacing, hit that 1400, came back, retested that 1300 level, and it was supposed to break through. So only time will tell. Just keep watching the Ether. It is currently in that little zone there. Okay, so here's Ether's one-day chart. It went up here. It hit that 1400 level pretty much, came back down to its resistance of 840. It came back up and hit that, now it's a support. Came back up, hit that resistance above 1400, hit that new all-time high. It then came down and it hit that uptrend line, which it's been on track with, which is nice. came down, hit that uptrend line, bounced back up, went to 1400, made another new all-time high. Now it is coming down to that 20-day moving average, which is usually a good sign of bounce up. And as you can see, it wicked onto that moving average, and the body is climbing back up. So we're going to see where that goes. If it continues to fall below that line and then breaks through the trend line here, and it goes all the way down here to the 50-day simple moving average, then that is a huge decline down to 928. And that would be a great sell if you were in a sell position up here and it does run down. But as you can see, so when price goes up like this, the actual price, but the excitement about the coin, the excitement about the price, relative strength index, the strength of the cost of the actual price, it is going down. So that is called a negative divergence, because if this is going up, but in reality it's going down, then this is an inflated price. And with that should come a fall. So we got to keep an eye on that. If people can get excited about Ether again and it pumped it back up here, then we could resume that uptrend. DOT USD, Polkadot, DOT turned down from the overhead resistance on January 25th and dropped to the $14.72 support today. The bulls are likely to defend this support aggressively. A strong rebound off of the $14.72 will suggest traders are accumulating on the dips. That could keep the DOT USD pair range between $14.72 and $19 for a few more days. The gradually rising 20-day EMA and the RSA in the positive territory suggest that bulls have a minor advantage. On the contrary, if the bears sink the price below $14.72, the decline may extend to the 50% Fibonacci retracement level of $13.28, and then to the 61.8 retracement level of $11.83. A deeper correction would suggest that the uptrend has lost momentum, and that may result in a few days of consolidation before the next trending move starts. So let's take a look at this chart. Okay, so here we have Polkadot's chart. And as you can see, the 20-day moving average is on its way up. The 50-day moving average is also on its way up. So those are good signs. But when we have, as our price shot up and it went so far away from the moving average, it had to kind of correct itself and come back down. And now that they have essentially connected, we can now get a better idea if it's going to shoot up away from the moving average, or if it could break down below and then run down to the 50-day moving average. So we'll take a look at that. But hopefully this resistance that became support, right, because it was resistance here, now it has become support, will hold. And then the price will not break below this, and it will continue to go up, and then it will break above our new resistance. If it breaks above the new resistance, then it could continue its uptrend as we talked about, just like it did here originally, right? So it came up here and it broke through. It had a little tap. It came back down, and then it really just rocketed through and it made it up to its next level. So now it's just consolidating in this little zone, but we want to see it break through for all you dot holders. If not, if it starts to break down here, it may be smart to get out of that, or if you're a trader, get into a sell position with that currency. XRP USD, after defending the 20-day EMA of 28 cents for the past few days, the bears are currently attempting to sink XRP below the $24.24 mark. The down-sloping moving averages and RSI in the negative territory suggest the path of least resistance is to the downside. A break below 24 cents will increase the possibility for a fall to the next critical support of 17.35. If this support also cracks, XRP pair could resume the downtrend with the next possible stop at 10 cents. On the contrary, if the pair rebounds off the current level, the bulls will again try to push the price above the downtrend line. If they manage to do that, the pair could remain range bound between 24 cents and 38 cents for a few more days. So let's take a look at this chart. All right, so XRP here, you can see its resistance line is now here, which is the 38 cent mark. And then its support level is what it says here, 17 cents. And it's currently sitting at 24 cents. It does have a downtrending slope here. And also the RSI is in the lower zone here. So not very much excitement for XRP. I personally let go of my XRP last week. I did get out of my positions with XRP and I moved that over to Cosmos personally. So hopefully that will be a good move. I just wanted more action from my holdings, and this one was with the lawsuit and everything, it was just sitting there. So I figured it would be smarter to try to get in something more aggressive moving. ADA USD, Cardano ADA, strong recovery on January 22nd, fizzled out at 36 cents on January 24th, suggesting traders use the rally above 34 cents to close their long positions. The bulls are currently defending the support line of the ascending channel. A strong bounce off of the level will suggest that the bulls are buying on the dips. The bulls will then try to push the price above the downtrend line, which will be in the first indication that the correction may be over. If the price sustains above the downtrend line, a retest of 39 cents could be on the cards. Conversely, if the bears sink the price below the support line, it will suggest a possible trend change and could result in a drop to the 50-day SMA of 23 cents. All right, so here's the chart here. The relative strength index is about medium, so we've got that to keep in mind. The price did run up and it hit this resistance level, and it did actually end up breaking that resistance level. As you can see, this is the channel that it has created, and it's trending in this channel. So right now it has this bottom of the channel in the uptrend line, so support line of the ascending channel here, but there it's now creating this new little downtrend line. So what we need to see is if this can rebound, which it's currently doing because it wicked out at the channel line and it's carrying up. It's right there at the 20-day moving average. If this can continue upward in its move today and tomorrow, break through this downtrending line, we want it to change structure, right? So we want market structure to change up here. We'll know that it's going to continue up. If it breaks down below this channel, then it could run all the way down to the 50-day EMA, which is the 24-ish cents there. Link USD, Chainlink. Link is currently witnessing a correction in an uptrend. This critical support to watch on the downside of the 20-day EMA of $20.15, which is near the breakout level of $20.11. A strong rebound off of the support will indicate the bulls are aggressively accumulating at lower levels. They will then try to resume an uptrend by pushing the price above the recent all-time high, $25.78. Contrary to this assumption, if the bears sink the price below the 20-day EMA, the Link USD pair could drop to $17.77. A break below this support will suggest that a change in trend and may pull the price down to the 50-day SMA of $15.58. So let's take a look at this chart. All right, so right now you can see that this Link coin has a downward negative divergence because the price is on a nice uptrend. Look here, but the excitement about the coin is down here. The moving averages, though, are on its way up, which is a positive thing. And also the simple moving average is on its way up as well. So if we can just get some of the hype back in the strength of the coin, of the purchase power and volume, if this can push back up into this positive range, then we can continue this uptrend. Right now, it has come down and hit this support level. And then we're going to see if this support level and EMA connection here will allow it to run back up and continue this uptrend that it's currently in. Litecoin, LTC turned down from the 20-day EMA at 139 on January 25th, which suggests that the bears are selling on relief rallies. The bulls purchased the dip to the 50-day SMA of $128 on January 26th, but could not push the price above the 20-day EMA. Renewed selling has dragged the LTC USD pair below the 50-day SMA today, and the bears will now try to sink to the $120 support. If they manage to do that, the pair will complete a bearish head and shoulders pattern that may result in a fall to $100 and then all the way down to $70. The downsloping 20-day EMA and the RSI in the negative zone suggests that the path of best or least resistance is to the downside, and the negative view will be negated if the pair rebounded off that $120 support and rise above $148. So here we have the Litecoin daily. You can see that it went up and it hit its high here of $160. It did bounce off this downtrending line. It came here to the support line, which our support line is at 120, and it's still continuing to bounce off. But the neckline of the head and shoulders, so shoulder here, a head here, and then a shoulder here. And this is actually the neckline, right? Because if this was a shoulder and this is the head where it connects, that would be where the neckline would be. This is currently at the neckline. If it breaks below that, which it looks like it will because the moving averages are sloping down, it just broke below the 50-day moving average, and the RSI is also sloping down as well. So not looking strong for Litecoin. So this is definitely looking good for the short sellers on the Litecoin. BCH USD, Bitcoin Cash, BCH failed to sustain above the 20-day EMA of 443 on January 25th. And that could have attracted selling from the bears who have dragged the price below the 50-day SMA, $38 or $389 today. The downsloping 20-day EMA and the RSI in the negative territory suggest that the path of least resistance is to the downside. A break below the $370 support could pull the price down to $353. If the level also cracks, the next stop would be $275. This bearish view will invalidate if the BCH USD pair bounces off the current level or the 353 support and rises above $450. All right, so here's Bitcoin Cash. It ran up, got that really nice price tag up there above 675 or 625, sorry. Came back down and it hit this new resistance level, came back down, and it's now at this support level as we just talked about. So it is below the 20-day EMA. It is below the 50-day SMA, and it is also below, or it also heading down in the RSI. So looking for shorts on Bitcoin Cash. BNB USD, Binance Coin, BNB could not sustain above the $43.09 on January 25th, indicating the lack of buyers at higher levels. The altcoin formed a doji candlestick pattern on January 25th and the 26th, which showed indecision among the bulls and the bears. The sellers are attempting to gain the upper hand by sinking the price below the support line and ascending broadening wedge pattern. If they succeed, the BNB USD pair may drop to $35.69 and then all the way to $30. Contrary to this assumption, if the bulls can defend the support line, it will suggest demand at lower levels. The bulls will then again try to push the price above $43.09. If they can manage to do that, the pair may rise to the $47.22 range. The flattish 20-day EMA, $40.99, and the RSI close to the midpoint does not give clear advantage to either the bulls or the bears. So let's take a look at this chart. All right, so as you can see here, it does have an ascending wedge. So the trend is up and up here, but down here it was tight, and then you can see that it's getting a little bit more spread out as far as that goes. So the strength of that channel is weakening. You can see that it did hit its high here, and then it actually broke below with the wick on this uptrend line. You can also see here that the 20-day moving average has become flat, and then also the 50-day moving average is in a little bit of an uptrend. So we'll see what happens there. Bearish divergence because the price is headed up, but the RSI is headed down. But you can already see the results of that, right? So some of the previous charts we looked at, the price was going up, 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 and the divergence was down here, but you hadn't seen the sell-off yet. So let's see if this thing continues down below. Does it crack all the way down to 35? Just keep an eye on this one because it is kind of just in a stalemate. It's kind of consolidating at this little range here because you could also draw your support line here and then also a resistance here, and it's kind of staying in this little consolidation zone. XLM USD. The failure of the bulls to push Stellar Lumens XLM above 28 cents may have attracted profit booking from short-term traders who had purchased the dip on January 22nd. The altcoin turned down and broke below the 20-day EMA of 26 cents on January 25th. When the price fails to build up momentum above the 20-day EMA, it shows a change in sentiment. The current fall indicates that traders used the recent relief rally to lighten up their positions. The XLM USD pair can now drop to the 50-day SMA of 21 cents, which may attract some dip buying. But if the pair fails to rebound off this support with strength, and the correction could deepen and fall to 19 cents, and then 15 cents maybe in the cards. The views and opinions expressed here are solely those of the author and not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision. All right, so let's go ahead and take a look at this chart. By the way, if you are looking for a way to learn how to read these charts, go to winwithryan.com. When you go there, you're going to fill out some information. On the other side of that, you'll see a video that explains to you the group of traders that we have accumulated. We have over 56,000 people in our group now. We are living the bullish lifestyle. So if you guys want to take a look over there, feel free, and you can join us with that. But anyway, so here you have the XLM coin. It ran up to the 40-cent level, and that was pretty much the end of the excitement. It's tapering down. It is in a current downtrend. The EMA is starting to slope over on the daily, and the RSI is also trending down. So looking kind of bearish for XLM at the moment, but if it bounces off of this moving average, it could actually change all of its direction. So keep an eye on this section here. And again, if you need to get access to these charts, tradingview.com is free. Thank you for watching the video. Don't forget to like and subscribe to the channel. I am winning, and so are you. By the way, the I am winning store is coming soon. Keep an eye out.